Well, Australia's share market has had a blockbuster week, breaking the 2.9 trillion mark today and ending the week on its highest ever note. This all came after a busy week where the Reserve Bank cut interest rates again here in Australia, and data show that unemployment is staying down at around the central bank's expectations. For more on why the markets were so very happy this week, I'm joined now by market analyst Anna Milne. Anna, thank you for your time.
Thanks, Amelia. Yes, the ASX 200 is at all-time highs and it closed on its highs today. It was actually a very US-led story, even though we did have some domestic information out also. Firstly, we had the US CPI data, which the market responded very positively to. And then we had US Treasury Secretary Scott Bessent saying that he thinks the central bank should cut by 150 basis points. Now, never can I remember a time where the government has interfered so greatly with central banks, but this is the world that we are in, and the markets responded accordingly. As you said, we had the RBA out earlier this week, and Michelle Bullock, the governor, was perhaps more dovish than the market expected, talking to maybe more rate cuts than the market had expected. And then the jobs data was positive too. But I think it's also even more impressive in the context of CBA, which accounts for 10% of the ASX 200, and it was actually down 6% in the last week.
And so we've also had reporting season, as you mentioned. We had CBA's results out this week. Some other big names, including ANZ. What did their results say and where did their stock go?
So ANZ was out today and it was received positively, and ANZ has been on an incredible run in this last month or so. What the ANZ result and also the Westpac result yesterday really brought into question is whether CBA deserves to trade at the premium that it does to the rest of the banks. And we've seen somewhat of a rotation as a result of this, money flowing out of CBA and into the other banks. For ANZ from here, the question is, what is Nuno Matos, the new CEO, going to unveil at his inaugural strategy day in the coming months? And the answer will really drive the share price from here.
And Anna, we've also had some retailers reporting this week. Baby Bunting is absolutely soaring after its profit guidance, but Temple and Webster ended the day down. Why?
It was quite a severe reaction for Temple and Webster today, but it was in the context of the strong up move it had yesterday on its result. So Temple's came out with its result yesterday and they said that momentum is looking pretty strong into the next year. And that's really the investor thesis on this stock at the moment. The stock is up over 100% this year. So it's been a magnificent run for Temple and Webster, and maybe some of that steam was coming out today.
And speaking of shopping, we've got retail sales data out in the States tonight, their time, or our time. What do you think that's going to do to Wall Street this weekend?
I think in the Australian context, it's really important what it means for the bond markets. So if retail sales data is quite strong, it might actually indicate that the market doesn't need as many interest rate cuts as currently forecast. And what that will do to equity markets is actually send them lower, which is quite counterintuitive. But we are in such a momentum market at the moment. The market is quite susceptible to shocks like these. So we'll be watching tonight's data print quite closely for its read through to the ASX.
Anna, I'm a big fan of a bond story, so let's look forward to that one. Thank you for your time.
Thanks, Amelia.
And a little bit more on what stocks individually did on Friday. If you look at Baby Bunting, which I noted absolutely soared up 39% on those profit guidance. The retailer that sells prams and baby toys, it's actually at its highest level in 2 years. On the flip side, Mirvac, as Anna was saying there, it's down on those results of its around 1.7%. And AGL was also a loser on Friday. And there's also been some movement with our dollar overnight, a little bit less hopeful than the ASX, but it's been gaining a bit more this afternoon, up around 65 US cents. And it lost a bit of ground overnight as the greenback was rising substantially. And in other news, an energy analyst says that a proposal put forward by the gas industry to shore up local supply could end up more expensive than other ideas that are being suggested. The likes of Shell and Santos are backing calls for a domestic gas reserve, which would set aside more gas for Australians to use and hopefully to insulate households from price shocks on the global market. The lobby group for companies like Santos and Shell is pushing a version of this where the gas that's set aside comes from new gas field developments. And gas energy analyst John Runciman says this proposal could take longer than setting aside gas that's already being produced and exported.
I suspect really what they mean is that it would apply to fields that haven't yet been developed or potentially fields that haven't yet been allocated to gas companies. That's potentially problematic. It generally takes sort of 2 to 5 years to bring a new gas field online once you've already done some analysis. If you need to go and do all of the work to prove that there's reserves there and then bring that online, generally it's 5 years at a minimum.
And there's ongoing concern about jobs that are being lost as companies make the transition to using artificial intelligence. Job ads by Seek are showing that listings for roles in things like tech and superannuation, insurance, engineering, they are all down noticeably on last year. LinkedIn recently laid off workers in Australia as part of Microsoft's shedding of thousands of jobs globally, which is linked to AI. One worker spoke to me about losing her job at LinkedIn earlier this year.
So I returned to work after the birth of my second child and having taken 12 months off on parental leave. And then unfortunately, 6 weeks after coming back to work, I was part of a big round of layoffs. So much like we're seeing with so many big and small firms around the world, there's a lot of uncertainty economically, and AI has been a huge front runner in terms of how the world of work is changing, and businesses are reacting to that. AI technology.
And that's Finance on Friday for you. If you'd like more analysis of the big business stories this week, including discussion about the push for a 4-day working week, you can catch Close of Business on ABC TV this weekend.